Good evening and welcome to the Accendo Traders Group. This is our daily stock market wrap-up for Wednesday, November 11, 2009. Our website is blog.accendotraders.com. Effective video technical analysis trading plans delivered daily. As a part of our trading plan, we try to prepare ourselves for the next trading session, that being Thursday. Looking at the economic calendar, earnings calendar, checking to see what stocks were upgraded or downgraded. Always looking for new trades, but most importantly, by having a trade plan and being disciplined, we have time to spend with our family. So the day that was, well, we had the market continue to look for guidance. As we've been talking about all week, there's been no real economic or earnings data to move the market, so the market's looking. And for Monday, Tuesday, there was a lot of movement in correlation with the dollar. And today, the market was kind of jump-started by what was going over across the pond. We couldn't contain the new highs because of the dollar, but initially we had the Asian markets kick off very high today, and also we had earnings with some of the European companies that had our market moving higher. But again, because our market couldn't sustain that new highs with anything besides just doing what they saw overseas, the dollar gained support. So as the dollar rised, the market could not sustain those new highs, and we pulled back. We also had some technical resistance. We talked about how the Dow continues to make new highs for 2009. Yesterday was a new closing high. Today was a new intraday high also. And now the S&P is coming into that range of starting to make new highs as compared to 2008 and 2009. So we had some technical resistance also to push us back down. So today, it was a positive day. 9 out of 10 sectors ended positive. You can see we ended up 44, but again, there's definitely some wicks on the top of our candles. We'll need to look at the internals to see what's going on there once we get to our charts. On the earnings front, we had Macy's. It beat is sort of a little spreading of the truth because they were supposed to lose, and they did lose. Just didn't lose as much as the market thought. But upgrades on Toll Brothers and a downgrade of Priceline. Again, none of this strong enough to move the market one way or the other. So we're coming tomorrow. We finally have some data. Initial claims that has potential to move the market. If it's a low number, that could move the market up. Check your news feed around 8:30 tomorrow morning. Crude inventories, that's a 10:30 thing. Treasury budgets, Initial claims probably will be one of the big movers. Also, before the market tomorrow, we have Walmart. We also have Kohl's, but I think Walmart, if they have some good things to say about the consumer, that also will move the market. So let's go ahead and head to those charts. Okay, so when we take a moment and look at our charts, there's a couple things to see. Again, yesterday we were kind of joking about chart patterns in our education portion of the video, and you can see we kind of have a mat hold rising speed pattern here. Although today's candle is a hammer, inverted hammer, but what I want to show you, again, I want to point out the volume going down again. Look at the volume, one up day and then sliding right back down. But I really want to put things in perspective. So I know this is probably going to be harder for you guys to see, but look at basically where we are. Here's our level right here. And where does that bring us back over to? The wicks from September/October of 2008. This was the beginning of the boom, the booyah. So that's certainly something to watch to see if we can break that. As we and again, also look at this. I mean, this really shows you where we are, the March lows to where we are now, and where our wicks from the day are touching on a daily chart. Let me blow it back up and go back over here and take a look at the Nasdaq. Nasdaq also showing a gap up today. Now, again, for our chartists, our people who know chart patterns, what pattern are we setting up here? So-so day, and then a gap up on a doji. Is that a morning star or an evening star? I always get those reversed, but if we got down tomorrow, especially if we have a bad initial claims number, be interested to see where we go from there. Take a look at the S&P 500, same as the Dow, inverted hammer. The wick is messing with our past swing high. Again, we get a bad number. It's be interesting to see where we go, but we may get a good number. We don't know. Let's switch over to the monthly charts. You can see here we are still trying to get up here to the 50 moving average. NASDAQ is already at the 50 moving average. Dow is also trying to reach up there. And again, this is that same line from before, and again going back to where our wicks were hitting from. Let's take a look at the internals. Okay, here we are looking at our internals, looking at the volume, and we can see again our volume continuing to go down. And although we do have a positive breadth, and it's it's respectable numbers, anything above 0.5 is bullish, and certainly 0.6, 0.7 is definitely bullish. But what's concerning me is, as we all know, technicians, is that up moves on lighter volume typically is bearish. So I need to see confirmation with some volume tomorrow. And again, I really think that initial claims number, how many times am I going to say that during this video, is going to be that catalyst, because the market has been looking for that guidance. As far as our new highs, still have a respectable number. Nothing great, not the 922, but still respectable number. And then we did have more stocks advancing than we did declining today. Here's a look at today's action. You can see again, as the market opened, we took off with the European and Asian markets, and then as we came into technical resistance and the dollar began to find support, the market tanked. And for those of us, our Dave Elliott folks who love failures, really right here at 1040 was our failure. You could have been more aggressive, but again, you can definitely see these are failed new highs here. And at this point, you should have been, for our intraday traders, should have been switching your trades to say we need to start looking to the downside. Same thing here, push down, and once we made a fill it to make a new low here, that was our move up, and we have some nice double bounce. This great setup has the harmonics of the Dow. The Dow futures have some great harmonics, some great numbers, and that's why you see some failures at these numbers. But again, you can see we took off, came down, and then just kind of consolidated for the rest of the day. As we move on to the educational portion of our video today, we're using the book Trading in the Zone by Mark Douglas, talking about the trader's edge and thinking in probabilities. Now, this is a continuation sort of what we talked about this week, which is that the market can do anything. Anything can happen. The market is a production of traders across the world bidding things up, selling things down. And so if that's the case, that anything can happen, how is it that we can take random outcomes, random moves of the market, and produce consistent results? Well, Mark Douglas begins that conversation that we'll continue on tomorrow, but he compares it to the gambling industry. These casinos make these elaborate hotels and make money day after day off of people's emotional gambling, off of throwing the dice and craps or betting hit me on blackjack, yet they make money over and over again. How is that? And just to give you sort of a precursor, is you have to think about this, as we always say, like baseball. You got to think about the probabilities. You're not going to hit a home run every time. You have to think about, eventually, I'm going to keep trading my edge. I'm going to keep trading my trading plan, making adjustments with the market. And this trade may not have worked, but the next one will, or the next one. The probability, I'm going to keep putting myself in winning positions, and that's how I will produce consistent results. So our partners, as you know, is our Futures Trading Room. They have a great 10-day trial at $29. This is a room that I am in. Alex is a great leader. I love being in this room. Great teaching. Come see my videos on why futures should be the investment vehicle that you're going to use. And if you're going to be a futures trader, check out this link here. E-mini intraday margin as low as $300. Again, the advantage of future is leverage. And if you use our link, you get 20 free contracts. So come join us on Sunday. We'll have a jump start sessions to get you ready for the trading week. There's a link for that. Also, if you just want to download the videos and not come to the website all the time, we do have a link for you to subscribe for our podcast in iTunes. And follow us on Twitter at twitter.com/AccendoTraders. Trading on risk, and I will see you guys tomorrow.